why use a Reg A Plus offering prior to do an IPO? These, you know, what's the reason for it? So these are the primary reasons. If you are in the case where a company can make it an S1 IPO or a Reg A Plus IPO because it's strong enough to make the choice, then these are the advantages. Through the Reg A Plus, you'll get lots and lots of investors, so you'll have genuine liquidity when you list. Genuine liquidity is very valuable to help maintain the share price, and it's what the markets want. It's very beneficial to you as a listed company. If you do a Reg A Plus method, then you are paying much less money for your audit and much less money for the legal filing fees, because this is not yet an IPO. This is a Reg A Plus. So your fees are far lower, especially for companies that have a long history. The 2 years of audit could be expensive. You'd rather not do that with a PCAOB audit right now. It's going to cost a lot more money. You do a US GAAP level audit for the Reg A Plus, and that's sufficient to go public with, right? And then you get, subsequent to listing, you add in the PCAOB audit for the next quarter, and you don't need to go get an expensive attorney to list, because you already did that via the Reg A Plus. So those are significant reasons. Another very significant reason is that sometimes people do an S1 IPO and they can't raise quite enough money to list. Maybe they got to raise 12 million to list, and they reach 10 or 9, and for one reason or another, the underwriter and the company shut it down. And guess what? Guess how much money they raised? Zero. The big zero. They spend an awful lot of money on those expenses, filing the S1, et cetera, broker-dealer, underwriter fees, et cetera, non-refundable, and have no positive money in the bank at all. Not a fun place. And the egg on the face, right? So a Reg A Plus, however, if it had the same outcome with the same intent, we would be raising money online in the Reg A Plus beforehand. So, and you would be able to close that money as you go. You would not have to give it all up and give it back. So you actually do a capital raise, and it's not a complete waste of money. It's a good deal. You didn't list, okay. You've got options. You can come back later. You can list on a lower market, but at least raise the damn money, right? So that's a significant advantage, pardon me swearing. I'm British, and if I let myself go, I'll be swearing, and you know, you guys would either enjoy it or hate it, so I've got to be careful with that. There are another set of reasons why companies use Reg A Plus to IPO. We are working with some companies right now in this situation where they're not quite strong enough to do an IPO right now. They aren't. But if we raise $14 million in a Reg A Plus, then they'll be strong enough, and we'll get the underwriter support that we need to list them. The fact of the matter is that the underwriters as a space, underwriters have been going through a very nice period of time where they can very easily conduct offerings, and they're getting picky and they're getting demanding. And so a good company can go to the right underwriters and be told, yeah, good, okay, so get the first 8 million in, and then we can go, you know, then we can go with this. And others might be approaching the wrong underwriter and get told, yeah, pay 45K, commit to these commissions, and then nothing happens because it's not really a strong enough company. I'm not saying there are many underwriters that would do that. We have a service where we find the right underwriters for you, and obviously we know who they are. But my point is, there are companies that are really interesting that aren't quite interesting enough to get the underwriter support to do an S1 IPO. We build the momentum and awareness, and especially the amount of money in the bank and the numerical investor account via the Reg A Plus, go back to those same underwriters further in the journey. Oh yeah, now it's a lot easier story, right? It's already a successful offering. It's already a successful raise. If it has the right characteristics now, we can take the company public and be very pleased that we did it. So that sequence of events is one where, you know, we have about 3 companies working with us right now with that kind of plan in mind. They aren't all signed up yet, I should say, because they aren't all signed up yet. Bear with me. My phone is still ringing in my ear, which is okay. Even you aren't hearing the ring. Okay, so, and by the way, as we go along here, you're welcome to write questions in that I'll do my best to answer at the end, all right? Advances, yeah, we'll get into the questions and answers at the end, otherwise I'll lose my flow, and God knows what would happen. You know, I could be going outside and jumping in a kayak or something, which would be of no use to anybody. Okay, so for the companies that aren't basically appealing enough to do any kind of IPO right now to the NASDAQ, then this is a very good way to go, and we can change the nature of the beast to where they can actually list, right? So that's a good way to go, and it's very appropriate when it is appropriate. Okay, check my notes here. Yeah, the company gets more attractive as it goes, basically. One more advantage to doing a Reg A plus en route to an IPO that applies to both companies that don't have to do it via Reg A plus and those that do, is that we're building brand ambassadors, right? Everyone that becomes a part of the company is going to be, because they like it and they wouldn't have invested otherwise, they're going to be out there talking the talk and telling their buddies about how marvelous it is, which is a good thing for sales. And if it's something that's obviously potentially very good, depending on the nature of the product from the company.